back to Morning Markets from True Potential. Today I'll be discussing reflecting on the US monetary policy meeting which took place yesterday. Equity markets were positive across the board. In the UK, the FTSE 100 was up 0.3%, whilst the more domestic market, the FTSE 250, was up 0.6%. Over in the US, the S&P 500 traded flat, whilst the Nasdaq was up 0.7%, and also we saw Europe up 0.7%, as well as Japan overnight by a similar amount. European equities were firmer, supported by technology, retail, leisure and travel sectors, and we're also going through the latest round of company earnings reporting, which is helping to boost equity market returns across the different regions. In bond markets, very little to report on. The UK 10-year yield edged up ever so slightly, up 1 basis point, trading at 0.57%. And in the US, the 10-year yield also edged up by a similar amount, trading at 1.25%. In commodities, slightly stronger, we saw oil push higher, up 0.4%, and gold also pushed up higher, up 0.5%. We saw a little bit of strength in the pound, good if you're going on holiday. So we saw the pound strengthen mainly against the dollar, US dollar, up 0.4%, and slightly higher against the euro, up 0.1%. But the main area of focus was yesterday's US Federal Reserve meeting. No real surprises, to be honest. As expected, there were no changes to interest rates, staying at the 0.25% for the Fed funds upper target. There was also no change in the $120 billion per month asset purchase program. So this is a method of the Federal Reserve pumping cash into the economy to help support US economic growth. Whilst monetary policy was left unchanged, there was a subtle yet important change in their language used. In recent statements, the Federal Reserve had stated that asset purchases would continue until substantial further progress has been made towards achieving its two goals, which is maximizing employment and the Fed consistently hitting its inflation target. However, the Fed has seen enough in the data to indicate that the economy has made progress towards these goals. This is an important step in the monetary policy normalization process. It's not to say that we'll see an imminent tapering of assets. Employment levels in the US remain more than 6 million lower than before the pandemic, while the latest Delta variant is keeping a change in policy at bay for now. The Fed Chair Jay Powell said he was in no position to discuss tapering schedules, with this being the first meeting into a deep dive into the timing, pace and composition of tapering. In terms of how the markets responded, there was very little movement as the Fed came in as expected, so stocks and bonds stayed relatively calm. All eyes will now be on the Federal Reserve conference at Jackson Hole in September, where we may see officials discussing the roadmap of tapering its asset purchase program before formally announcing it in December. A slightly busier day today in terms of the economic calendar. In terms of the key data points that I'll be watching out for, well, we'll get the preliminary US GDP figures, we'll get the US employment data, we'll also get European inflation numbers, and we'll get housing data from the UK with the latest mortgage approval readings. That's all for today. Thank you for listening, and we'll see you tomorrow. That's all for today. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.